Normally we talk about a stock that's doing well and we give the news, and today I think it's incumbent upon us to be able to show you how to manage your trades, especially stocks that we've talked about on the channel. We just give you the stocks, we tell you why we like them, we use the VectorVest system, all of those things. But I came across a comment this week in the YouTube chat and said that, I went and I bought Palantir when you talked about it. I lost 10 or 15% and I got out of the stock and I canceled my VectorVest subscription. Folks, that's not what we want to have happen. As much as I can tell you about different stocks that are making the news and using the power of the VectorVest system, I think that it's necessary that we have a conversation about how to manage the stocks that we talk about on the channel. So if you're looking for something glamorous about, hey, go buy this stock, or that's not the video that I'm giving tonight. This video is for those people who want to learn how to better manage their trades. That's what I'm going to give to you this evening. All right, I've got 10 stocks overall. I'm going to give you 5 tonight. If you want to see the next 5 stocks that I have, and it was worth it for you to watch this video, make sure you hit the like button and make sure you type in the comments next 5. All right, that'll let me know that I'm talking to the people who need to hear this and not just wasting anybody's time. All right, so 5 stocks we've talked about, whether it was Ryan and I on Wednesdays, or Ryan doing a video or a short, or me doing a video or a short. I've got 5 stocks that we've talked a lot about. Now, the first thing I need you to do is get into the right mindset when you look at a stock potentially to buy, whether it's something that I talked about or Ryan talked about or anybody on our YouTube channel. All right, so let's start there. The first thing that I can see on this list of stocks is that they're all buy recommendations. Great. Doesn't always mean it's the right time to buy, no matter what the story is or how we spin it. I need you to understand that. All right, number 1. Number 2, a lot of stocks in the market are going to be overvalued. Why? Because people are still putting money in the market rather than putting it in the bank. Well, that's starting to change a little bit because fixed income, like a CD, is paying out 5.5, and I think it's catching people's attention. And I think that the overvaluedness of the market, as people pull out of the market, that's going to change. Okay, so I'm looking at these stocks. I'm starting off with SMCI in the chip space. I could have looked at NVIDIA, I could have looked at AMD, but I've got SMCI. What I do like about the stock, first off, if I'm thinking about getting into it, it is undervalued. That's a rare breed in the market right now. I look at our indicators: relative value nicely above 1, relative safety above 1, relative timing RT, VST, CI. All of this looks good on the stock. Now, I know a lot of you have been in the stock. It took a big dip. How could I have protected myself against that? We're going to cover that in a second. Microsoft, overvalued, fundamentally sound. RV not nearly as high as SMCI, but fundamentally sound all the way across, earnings growth at 12%. Amazon, overvalued. Great fundamentally sound company. Everything looks good, growing their earnings at 23%. Apple, Glenn's favorite stock, overvalued. Relative value below 1. The growth factor of Apple is no longer there. It is there as this is a longevity play. The people who are in the Apple ecosystem, such as myself, will always be there, right? The company continues to make money, though, because of their products. It's in an uptrend, VST above 1, CI above 1. Earnings growth rate, remember, it's not a growth play anymore, is only at 4%. Palantir, a stock that I'm heavily on. I love this stock, especially from the AI perspective. Grossly overvalued. Fundamentally not sound. A lot of news moving it higher. RT is above 1, VST above 1, goes up more than goes down, and growing their earnings at 23%. I want to start with Palantir. The stock's got a lot of news. It is overvalued, but fundamentally not sound. Now, the mindset kicks in. If I decide to trade this stock based on what Glenn has said, Ryan has said, the news has said, I know that it's not fundamentally sound. I put a tight stop or tight leash on this stock. Does everybody understand that? All you can do is shake your heads because I can't see you. But I think that's important when you pull up a stock that you're interested in knowing where your mindset needs to be from the onset. This is a speculative play. Yes, it's a buy, and they've got great earnings growth, all of that. It is a speculative play. What kind of stop do I put on this? A 28.7. 4-1, actually, 4-1 risk to reward. I'm not going to be greedy. I'm going to take 28% if it gets there. But I'm not going to let my loser become a big loser. I'm only giving it 7% to the downside. Let's look at SMCI again. Fundamentally sound, everything good. I'm going to give this stock a little bit more room. I'm probably going to put something like a 50-15. I'm willing to let this stock run 50%, take my profit, or even if it gets halfway there, take half off the table when it gets to 25. Nothing wrong with that. But I'm not going to give up more than 15%. I'm willing to do that on a fundamentally sound stock that's undervalued. Microsoft, overvalued, fundamentally sound, everything. This is a stock that's been around a long time as well. I'm willing to give this a 50-15 as well. Again, once it gets to 25%, though, I'm going to take half off the table. I think understanding that you do not have to stay into the trade all the way to the end is very important. Amazon, way overvalued, fundamentally sound, everything, same kind of scenario. 50-15, 50% gain, get out, 15% loss, no more than a 15% loss. But once it gets to 25% of that 50% to the upside, I'm willing to take half off the table and let the other half run. Apple, I'm not sure I like the relative value below 1. Notice that for the other three, they do have relative values above 1. Apple, I'm pretty much, even though I like what I like, I am probably going to put a 28.7 on here. All right, take that 28% gain, but I'm not going to give up more than 7%. Now, with everything that I just said, and hopefully you wrote this stuff down, I want you guys to take notes during this video because it can play a pivotal role in you either making money, taking profit at the right time, and not letting your losses become super big. That's very important. For all of you who are brand new to the channel, VectorVest gives a stop price on every stock. So if you don't know where you sit in any of the gauges that I just gave, always feel comfortable in using the stop price. Every stock has its own stop price. It is a 13-week moving average adjusted for the fundamentals of the stock. If the RV and the RS are good, we're going to lower that stop price to automatically give you more room to the downside. But if the fundamentals are not good, we're going to raise that stop price to get you out of the stock faster. You'll only find a stop price here in VectorVest. Now, with everything that I just said, where is the action happening? On a graph. So I'm going to graph all of these stocks, and you need to be able to make common sense decisions no matter what stock you're in. Here is our graph. I'm going to put this on a 3-month graph. SMCI hot because of the AI, but is it? I can look at the graph and say, holy smokes, this stock is truly in a channel. That will adjust what stops I put on place. Because knowing that I'm just retracing from resistance right now, 1, am I jumping into it if I'm not? No. 2, if I do own it, when it starts to retrace from resistance, I take half off the table. That's important. Don't give it all back. I love the earnings. Long term, I like the stock. But right now, looking at the graph, I'm going to take some off the table. Next one, Microsoft. Beautiful looking equity curve. Earnings per share looks good. This is why I'm willing to give this a 50-15. I can look at the graph. It's definitely moving higher. I'm going to give it some room. All right. Looking at the next stock, Amazon, a little bit of a channel as well. I'm probably now moving more so to that 28.7. All right, 28% to the upside, 7% to the downside. But I see I got trend. How about if I look at a graph and I put some things like support and resistance, use those things on your graph to get you out of the stock at the right time. Long term, though, I do like the stock. Next one, Apple. I like that it's moving up, but look at these bars. They're getting smaller and smaller. It's telling me that it's getting exhausted in its move. What would I do here? I'd probably take half off the table right here. That way I can still let the other half run if the market or the stock continues to go up. Long term, I still like the stock. But over the last 3 months, a little bit of a sideways move. And let's go to the last stock, Palantir. I know that this is a speculative play. I put a tight rein on it, 28.7, but I can also see I've got a moving average. I got levels of support and resistance. Use those to help you as well. But, for a speculative play, look at that earnings per share. All right, so tell you what I'm going to do. From this perspective, I've got 5 more stocks. You want to see those stocks, I need you to hit the like button. And in the comments, I want you to type next 5. Wait a minute. I'm doing this on the fly. Do you still want to see the next 5? Make sure you put in next 5. But I want a stock that you want me to look at. How about that? I've got a watch list of stocks, 5 more. But I want to keep you more engaged in this video. You want to see the next 5 stocks? Give me one of the stocks that you would want me to take a look at. I will go through and choose those. The next video that we come out with, I will look at those 5. But I got to make sure that this was worth your time. Hit that like button. Let me know it was worth it. Because, I'm sure that a lot of you left right away when I told you that it wasn't a glamorous video. This is a teaching how to fish moment. And I think it's really incumbent upon us that if we can talk about all of these different stocks, that we need to show you how to get in and out at the right times. So folks, if you liked it, make sure you hit the like button. If you're brand new to the channel, hit the like button so that you'll hit the subscribe button so that you'll be alerted when the next video comes out, maybe with one of the stocks that you just put up in there. All right, with that, folks, this video is over. Until the next time, see ya. Hey, VV Nation, we're coming to Dallas, Texas on December 2nd, 2023. You need to register for this event by going to www.vectorvest.com/Dallas. Let me give you a couple of reasons. 1, this event will not be recorded and you must show up to get all of the benefits of this masterclass. You're going to learn about a trading system that more than triples the performance of fixed income investing. And that's a big topic of discussion right now. Not only do you get the new strategy that outperforms fixed income, but you're also going to learn more about the near perfect indicator. Just listen to that name, the near perfect indicator, only found here at VectorVest, and how to use it. We're going to also talk about how to find the stocks that align with your investment goals, and we're going to show you how to effectively manage your portfolio. Learn how to maximize gains and minimize losses. Another perk for showing up, come to meet your favorite instructors live. We're going to have Ray Clark, the Vice President of Education, Jim Penna, who's the Manager of Retirement, and yours truly. We're going to be there live, folks. This event is also located in downtown Dallas at the Renaissance Hotel, and there's free parking. They say everything is big in Texas. Well, let's look for a big turnout in Texas. Show us some support. Once again, I need you to register. Go to www.vectorvest.com/Dallas. It is a must-attend event. We will see you there.